Hey guys, good afternoon. Happy New Year's. I haven't seen you guys since 2023, guys. And look here, I got to pop up because there's a lot going on, a lot of major tax changes that impact all of you guys. Well, all of us, me too, when we go to file our taxes. Congress just came up with a deal that impacts a lot, from businesses to the child tax credit to the employer retention credit. Guys, when I tell you, it was a lot of things happening behind the scenes while we were fussing online. See, this is the thing I keep telling you guys. While we're online BSing around, Congress is doing work. And look here, what's been happening since the New Year's. We've been fussing and stuff. Didn't even realize, many of you may have not even realized that we were on the verge of a government shutdown. This is how these new agreements that becomes law ended up happening. So to prevent the government shutdown and just so much tax disagreements, guess what? Congress and them reached a deal. So guys, if you are watching me on any social media platform and you're unable to see my screen and you want to head over to my YouTube channel, which is Folasade TV, okay? Because I will be sharing my screen throughout today's segment, guys. And so please be mindful. I do have a meeting, so we need to kind of get this done. Well, try to get a lot done today. Well, within this hour. Okay, so let me go ahead on and first let's read the article together, guys, and then we're going to break this thing on down. So if you are new to me, this is probably your first time seeing me bring live news to you. I used to do this all the time, but with time,
my publicist said I got to go live today. So I'm going to go live today. I'll try to keep doing this, but I used to do this all the time, teaching you guys as the laws happen so you guys won't get taken advantage of and filling you in. So right now we're on Thomas Reuter's site. It says U.S. lawmakers reach a $78 billion tax deal for businesses and families. Okay. So it says, what's today? The 16th, right? Okay, it says January 16th, congressional negotiators have agreed on a nearly $80 billion bipartisan deal providing tax benefits geared towards businesses and low-income families. The leaders of the Senate Finance and House and Ways and Means Committee said on Tuesday, which is today, the $78 billion package will temporarily, here's the key words, guys, it will temporarily expand the child tax credit and boost the low-income housing tax credits while also bringing back a range of deductions for companies, the two committee chairmen said in a joint statement, okay? So they said they're going to expand the child tax credit temporarily, guys. So this is nothing that's in the works forever, which really should be the goal with certain tax credits like that. It should just be on the books year after year after year, but they don't want to, okay? It says the deal also includes disaster tax relief, among other provisions. Senate Finance Committee Chairman Ron Wyden, a Democrat, and House Ways and Means Committee Chairman Jason Smith, a Republican, said of the deal, any package must still pass both Democratic-led Senate and Republican-controlled House of Representatives before U.S. President Biden could sign it into law, at a time when lawmakers are scrambling to keep the government funding. So remember, guys, during my intro, during my mini monologue, I told you guys that a lot of you did not know that the government was doing a government shutdown. But if you've been watching my content for a while, I've been telling you guys this over for the past couple of months that we're on the verge of a government shutdown. They're just not telling us. So behind the scenes, to prevent this from happening, they come up with bills. And when they say bipartisan, that means both the House and the Senate agrees, like, oh, they're on the same page. Most deals, major laws never get approved or pass Congress because they don't agree. In this case, they both agree, the Republicans and the Democrats, okay? It says the agreement comes as, and I'm reading this live, guys. I didn't read this article. I just found the article. My content is the more thorough content, which is the actual law. So you guys will see that when I pull that up. I pulled that up, but I didn't even get to read this article yet. It says the agreement comes as Congress aims to avert a partial government shutdown and keep federal agencies operating into March. So right now, this deal is being thrown out there, honestly, just to prevent us from closing, which is, again, a temporary fix into March, okay? By passing a short-term spending bill to temporarily fund the U.S. government with some spending set to expire this week. It will generate more than $70 billion by curbing an employee retention credit. So let me stop sharing really quick, guys. We have to have this discussion before we go any further. Hold on. So right now, what's happening is that they are trying to prevent paying out the employer retention credits. So remember, during COVID, if you had employees, you were able to get credit for the wages that you paid them and the taxes and things associated with that. In this new deal, they're trying to cut the employer retention credit. So it seems like they're doing us a favor, guys, but in the behind the scenes, they're really slashing a lot as well. So right off the bat, they want to temporarily expand the child tax credit. That means make the refundable portion a higher amount, and we're going to talk about that. And then right now, we also learned that they're trying to cut the employer retention credit. So guys, if you're watching this, please share this video with one of your colleagues, your friends, or anything. Please let them know. Folasade is live, and she's going over this new law right now. And I know a lot of you, this impacts a lot of you. Okay, so let me go back. Alrighty, so it would generate more than $70 billion by curbing an employer retention tax credit passed amid the COVID-19 pandemic. aimed at helping businesses avoid layoffs. So they're trying to cut that. Okay. Alrighty. So that's the Thomas Reuters site, guys. That's their article. And when I go back one on my Google search, all of these articles are similar to the same. So we're going to focus on one of them, which we just read, which is the Thomas Reuters one. But what we're going to do, we're going to take it a step further, guys. We're actually going to pull the actual law that they end up sharing. So let me go ahead and go over that with you guys line by line. All right, let me know if you guys can see my screen. Okay, I can see it. Alrighty, so here's the thing, guys. So part one of this, right off the bat, is that they want to, as I mentioned earlier, that they want to expand the child tax credit, right? So I'm going to read you guys. This is why if you're watching me on Instagram, you may want to come to my YouTube, because you can see my screen. I'm about to read it to you, the actual law. That was just the verbiage from the articles, but this is the full breakdown of what it entails, okay? So what they want to do is do a recalculation of the refundable credit on the child tax credit amount. So guys, many of you don't know this, but the child tax credit is broken up into two sectors. There's a non-refundable portion, and there's a refundable portion. So let's say, for example, your child tax credit is really normally $2,000, right? And the refundable portion is $1,600. So that $1,600 says, okay, if you don't owe any more taxes, we'll give you that $1,600 back in your pocket. You can get that as a refund. The non-refundable portion get applied to the actual taxes that you guys owe. So let's say, for example, when you go to file your taxes, you owe $2,000 before the child tax credit, right? So when you apply your child on there, right, you get the child tax credit. So if your taxes was less than $1,600, right, you will be able to get that refunded to you as a refund. The difference will go towards paying down the taxes that you owe. So a lot of you guys get a lot of refund because you don't end up owing taxes, okay? And you get the refundable portion per child. So you will get the 1,600 times 3 children, 1,600 times 2 children, okay? The other portion, the $400, gets applied to the tax amount. So you guys don't get that back in your pocket. What they want to do now is recalculate the refundable portion so you guys can get more money, that have children like myself, can get more money back in the child tax credit as a refund. So it says this: under current law, the maximum refundable child tax credit for a taxpayer is computed by multiplying the taxpayer's earned income by 15%. This provision modifies the calculation of the maximum refundable credit amount by providing the taxpayers first multiply their earned income in excess of $2,500 by 15%, and then multiply that amount by the number of qualifying children. This policy will be effective for 2013, 2014, and 2015. So they're trying to now get you a higher amount for the refundable portion amount for this year coming to file, next year, and 2025. Okay. They says under the current law, the maximum refundable child tax credit amount is $1,600. Remember, I just said that, guys. You can get that back, $1,600. That's the maximum. Okay. What they're now trying to do is increase the maximum refundable to $1,800 for this year when you file your taxes, $1,900 in 2024, and $2,000 in 2025. So what does that mean? That means if you don't owe taxes and you have a child that qualifies for child tax credit, then you will be able to get $1,800 back as your refundable portion rather than $1,600. And that amount is going to go up to $1,900 for 2024 and $2,000 to 2025. Do y'all understand what I'm saying? Put 1 in the chat if you understand what I'm saying. Put one in the chat if you guys understand what I'm saying. Because this is a lot. This is one of our digestible moments, guys. Remember I said we cannot always have funs and giggles. Okay, we gotta we gotta talk some stuff now. Okay, y'all get it? Okay. All right, so Kemper said he really don't. All right, let me see. Okay, it's challenging. All right. So let's say when you guys file your taxes, you don't owe any taxes. Some of you don't owe taxes. You just pay money throughout the year because you really don't know it. Normally, you would get $1,600 back for your child. Actually, you would get the $2,000, right? But you can't get the full $2,000 as a refund. You can only get $1,600. So what they're trying to do is say, all right, we want you guys to get a little bit more than just $1,600 back per child. We want you guys to be able to get, was it $1,800 back per child for this year? A higher refundable amount. It's kind of hard to explain. Maybe later into the tax season, I probably will go into more details, but just think of $1,600 is what you were getting at first. And now they're saying $1,800 for this year. So they're giving you an additional $200 as a refund that you can get back as a refund per child. Okay. Okay. Another thing that they did, and I do like this one. So they're giving you the option to choose your earned income amount. So let's say, for example, the amount of income that you had for 2024 was lower than your income for 2025. If you qualify for the earned income tax credit, and certain like other credits like the retirement savings credit, because your income was so close to qualifying for earned income credit, then you can elect to have the lower income claimed so you can qualify for certain tax credits. So I do like that, but that's not going to be in effect until next year. So right now, what they're trying to do is increase the child tax credit by $200 for this upcoming tax year. And so, guys, this goes back to always what I said. Don't rush to always file your tax return as soon as the tax season opens, because there's so many changes that happens between you guys getting your W-2s and Congress. Okay, and this is the prime example. Let's say if somebody used their end of the year pay stub, or ended up getting their W-2, hopped on TurboTax to submit their return so they can be the first one when filing season open, then if they approve this fully and implement the tax forms, then you will have to do an amended return just to get that additional $200. So here's why I always recommend you guys take some time. Let's figure out if there are going to be any tax changes before you guys jump out there and file your tax returns so early in the year. Okay. Alrighty, so we talked about the child tax credit. They're trying to increase that one. I know a lot of you guys are interested in the employer retention credit, so I'm going to jump to that page of the law, okay? And then we're going to go into like the other credits that they implemented as what that they're trying to either extend or increase, okay? So right now we're talking about the employee retention credit, okay? So right now, if you guys have been watching my content with this employee retention credit, I told you guys that they were buckling down, right? They were buckling down, and they did the moratorium where they stopped the employee retention credit, right? They stopped accepting the applications. Now, with this new law, what they're trying to do is do away of it. So they're trying to say, as of January 31st, 2024, they're no longer accepting any more ERC applications. So that's what they're trying to say about the ERC. So yes, so for the child tax credit, you do have to have children. Okay, so let me go there. So it says here, under current law, there is a $1,000 penalty may apply to a person who knows or has reason to know that an understatement of the tax liability of another person will result from the use of his aid, assistance, or advice. So if a tax professional gave you guys fraudulent tax advice regarding you qualifying for the employee retention credit, they can be penalized, okay? It says this section increases the penalty from aiding and abetting the understatement of tax liability by the COVID ERTC promoter, separately defined to the greater of $200,000. So the penalty was originally $1,000, okay? And now it is up to $200,000. Or 75% of the gross income of the ERTC. So whoever did those ERTCs, they can now be fined up to 200 and something $1,000. So the employee retention credit was a COVID relief credit that they gave to businesses that had employees, that they were able to qualify if their businesses sustained a 20% or more loss in revenue. They were able to qualify to get their payroll taxes and things, that they can pocket it. It was a credit. They can get that money back to keep their companies opened. What happened was a lot of you abused the program. And if you guys remember the live stream I did, I said they said they had over 600,000 applications, and they said about 90% of those applications were fraudulent. And they were sending them all to the Department of Justice. Y'all remember that live stream I did? Okay, so now it's back. Now they're upset at the people that promoted the COVID relief programs. And they're now doing up to $200,000 for the businesses and $10,000 for the individual, or 75% of the total income that they made from doing the ERC programs. It says, under current law, a paid tax return preparer may be subject to a $500 penalty. So basically, they're just increasing the penalties from $500 to $1,000 for the preparer. Okay. And then it says, under current law, certain material advisors are required to disclose information to the IRS with respect to designated type of transactions, and make a list of the advice recipients with respect to each transaction. So the IRS is now requesting a breakdown from those promoters. So basically, they're going after all of the people that promoted the ERC programs, and then some companies as well can be fined up to $500,000 as well. But now here's the kicker, guys. It says, under current law, the statute of limitations period on assessment for the COVID-related ERTC is generally 5 years from the date of the claim. This section extends the period to 6 years. As a correlative matter, it extends the period for taxpayers to claim valid deductions for wages that were invalid for the ERTC claims and needs to be corrected within a certain period. So they extended the statute of limitations for it as well. So somebody asked me in one of my posts the other day, how long do I think this mess is going to go on? This is an example. 6 more years they've extended the program for. So I told that person in my post, in my message, 10 to 15 years, we're going to be dealing with this COVID, PPP, all of this fraud stuff. Because there's so many scams that people did. It's billions and billions, maybe even trillions of dollars that was scammed. And they're coming after it. Okay, so now under the current law, taxpayers can claim COVID relief ERTC until April 15, 2025. This section bars additional claims after January 31st, 2024. So they're trying to close the COVID relief program as of January 31st, 2024. So what do you mean when you say they're going to have a shutdown? So right now, the government is in the midst of preventing us from having a government shutdown. A lot of us didn't know, guys, because they never spoke of it. The only reason why I know is because I pay attention to all of these things and read everything. But they've been fighting and preventing this government shutdown for the past 7 months. Okay. So right now they're trying to do away. Thank you for subscribing to the channel. I appreciate you guys. If you haven't subscribed to our YouTube channel, please head over to Folasade TV so you guys can subscribe so I can be encouraged to keep doing things like this, guys. Y'all done push all them scammers and all of them people that frauded y'all all of these years. Y'all share all their stuff, do everything for them. I'm going to throw shade out there. And now they done disappeared with all y'all millions. Now all y'all left with the bag. And y'all responsible for the mess that didn't got y'all in. It was people like me that been legit. Y'all don't want to do things the right way. I had to entice y'all and scam y'all to make you pay attention to me. I'm not doing that. But guys, subscribe to the YouTube channel so I can stay encouraged on bringing you guys this type of content, because I got burnt out because y'all was paying attention to all of the scammers, and they done scammed y'all asses. Now y'all done got that ERTC fraudulent, PPP, the SBA, EIDL. You done all them tax deductions and all them tax credits, and now everything is coming to a full head. But if you guys were paying attention to me, you guys would have taken advantage of those things the right way, took the tax credits and things the right way, and you would be sitting back like a few of my clients watching the program like, Folasade, you tried to tell them, Folasade, you tried to tell them, but they ain't want to listen. So guys, I'm going to be honest, I've been schooling y'all like this every time. When new laws come, I tell you. When new programs come, I tell you guys. But y'all wanted to pay attention to the scammers, and they got me banned. For 2 years, I've been banned. 2 years. But let me stop my rant. Just tune into the live streams. I give you guys all of the updates. Okay, so you guys can see that they're increasing all of the penalties for the ERC, and they're trying to halt that program as well, okay? So now for my business owners. So remember, Congress approved the increase, the reduction in reporting requirements for the 1099. So remember, initially back in the day, if you collected money via PayPal, Square, Uber, any third-party merchant, right? The company didn't have to report you to the IRS unless one or two of these scenarios happened. You either made $20,000 or more, or you had 200 or more transactions, right? That was the initial requirement for you guys to receive a 1099-K from those merchants, right? So when Biden came into office, he said, remember I told you guys that was part of his tax plan. He wanted to know what y'all was making. So he changed everything and said, no, we want them to report the income at $600 level, and it's across the board. I predicted that wasn't going to be able to happen so smoothly because you have platforms like PayPal and Zelle and things where there's a lot of personal transactions being handled. So how do you distinguish between the business transactions and the personal transactions? I predicted all of that. So now we're here. They just came up with a new policy saying, okay, well, at least $5,000, they start reporting it, right? This is what they just said 2 months ago. Well, a month and a half ago. Now, in this new suggestion, here we go. They're saying, I'm going to read you guys the current law, because remember I told you they just changed it, and then now the new one, right? It says, under current law, the reporting threshold for payments by a business for services performed by an independent contractor or a subcontractor for certain other payments is generally $600. Remember they changed that, right? Okay. This section generally increases the threshold to $1,000 and adjusted for inflation after 2024. Under current law, the reporting threshold is, in some cases, based on payments during the taxable year. The new threshold is based on payments during the calendar year. This section applies to payments made after December 31st, 2023. So they're saying, okay, forget about what happened in 2023. Now, anyone that makes at least $1,000, right, they will need to be issued a 1099 NEC or 1099 miscellaneous. So what's happening, guys? They're trying to meet in the middle. But regardless, everybody is starting to get some form of reporting requirement. So if you collect money on PayPal, Stripe, Uber, all of them, they have to report something now. Okay? Not this 2023 year, because the IRS gave them an extension. But they're saying by 2024, they need to be able to at least meet the $1,000 threshold. So they're giving them another year. However, from my professional experience, I still need you guys to file your 2023 tax return correctly with all of the income, because they are going to be comparing all of the income from 2020 all the way until 2025, some sort, so they can start continue their auditing and collecting the money. Remember, the goal is to tighten up IRS so much so they can collect all of the trillions of dollars that's out there. That's why they have the new BOI form, so they can connect the dots between your businesses and what you're making. So all of this connects. So I don't need you guys to say, oh, woof, I don't have to report it for this year. Yes, you do, because this year will be used to compare to the other years. And you don't want to get yourself in any more trouble. So file your income correctly. Do not underreport your income. Okay? You don't have another year. Even if they're not going to report it, what they're trying to do in the law is also make it retroactive. Whereas though once they do the 2024, they're now going to give them time to go back and do the previous years. Okay, so we talked about the child tax credit amount. If you guys are just coming in, increasing from the $1,600 refundable portion to $1,800 for this year, $1,900 for 2024 tax year, and then $2,000. We talked about them increasing the penalties for everybody that promoted or benefited from false ERC applications, and also that they're trying to dissolve the ERC application process entirely. The funding will go away as of January 31st, 2024. And then last but not least, we just talked about the $1,000 threshold for the 1099 reportings. And I recommended you guys to make sure you file all of the income correctly, because they're going to also pull this return to compare your income against all of the things and applications that you guys submitted to get these loans and PPPs and ERCs and sick pay leave and all of this stuff. They're comparing everything right now. Okay, so guys, do you have any questions before I go any further right now? Do you guys have any questions at all? Okay, guys, so I'm looking for the next one that I think is really, really important for you guys to know about. Let me see. So we talked about, okay, for the businesses. Do I want to talk about the depreciation, or do I want to talk about that in another one? Okay, so they're also extending the 100% bonus depreciation. Okay, so I know you guys have heard about, oh yeah, if you buy a vehicle, you can take bonus depreciation where you could get almost 100% of the value that could be depreciated on that asset and write it off as a tax credit. So what they did was they made a lot of changes to it. They wanted to dissolve it, phase it out, and all of those things. But now they're trying to extend it. Okay. So I'm going to go ahead and read it to you. It says the provision extends 100% bonus depreciation for qualified property placed in service after December 31st, 2022 and before January 1, 2026. For longer production period and certain and for specified plants planted or grafted after December 31st, 2022 and before January 1. The provision retains 20% bonus depreciation for property placed in service after December 31st. So it goes back to the 20% reduction as of 2025. So here's, guys, when they implement short-term tax credits like that, it is more so just to keep us from the government shutdown. They're also going to increase the limitation on expense and depreciable business assets. So they had a limit, guys, and this is more, I probably will go in more detail on it more like when I have more time because I have to get ready for my next meeting. But they're trying to allow us to, because some assets that we purchase, guys, we have to depreciate. But they're now saying, okay, well, we can expense some of them. So that means we can get the full write-off for that first year. Okay. So right now, this have a lot to do with Taiwan too. This is crazy. It is so crazy how our tax system is so connected to everything. It says United States, Taiwan expedited double tax relief. This subtitle provides targeted and expedited relief from double taxation on U.S./Taiwan cross-border investments. I'm not going to go into that. That's another thing. Wow. What else? What else they got in here? Okay. That's more so the most important things. Everything else is those behind the scenes things that we don't know, like deals. We have treaties and different contracts with countries and everything, guys. So this one is impacted by Taiwan. If you guys pay attention to the news, you see what's going on with Taiwan. I think China trying to take them back over. All right, so let me share this, guys, and then we're about to go out. So here is this one. This is just a synopsis of what I talked about. It's that they expand the child tax credit, right? We talked about that. Y'all know what the amount is. $1,800, $1,900, $2,000, right? They want to eliminate penalties for larger families. So they want to try to, because people that have four more children, child tax credit amount is limited. Great info. Share this live stream and subscribe. Okay, yep. 1 year income tax look back period. That's kind of challenging to explain. They expanded the research and development. They want to allow businesses to be able to deduct all of their business entrants. And we talked about the bonus depreciation expensing situation. I told you guys they got something in here for Taiwan. Okay. Yeah. So, guys, I'm going to be really honest with you. This is the prime example of why we need to pay attention to what's happening. Because while we were bickering online, they were approving laws that really we don't really benefit from. If they give you guys an additional $200 for the child tax credit across the board, what are they getting in exchange for it? It's something happening. Okay, they're trying to, squeeze this bill in, not for the benefit of the American people. And that's what it says. It's called the tax relief it says this law is called the Tax Relief for American Families and Workers Act of 2024. Where's the benefit for the workers? Right now, I see them trying to let go of the ERC, and there was so many legitimate business owners that never, that didn't even qualify for the ERC. Now they're not eligible, or the ones that legitimately submitted an application may not get it, or now the timeline is cut back. Come on now. So yeah, guys, you heard it here first. They're now about to push this bill to Biden and see if he approve it. Since it's a bipartisan bill, there is a higher chance of getting it approved because that means both parties agree, okay? So please pay attention. Do not rush to file your tax return right now until we get approval and the final say from the IRS on the child tax credit, because if you guys do file your return early, either you're going to have to wait for the IRS to recalculate your tax return and submit you the refund amount, or you may have to amend your return depending on the steps that they tell us to take. So don't rush to file your tax return when tax filing season open on January 29th. And guys, if any of you are interested in working with me, please hit the link in my bio and get on my calendar so we can discuss, what your fees will be, our process, and things like that if you want me and my team to serve you guys, okay? So if you guys have any questions, post your questions. I look forward to answering them. And yeah, there we go. Increasing the child tax credit from $1,600 to $1,800 this year, $1,900 for 2024, and $2,000 for 2025. They're trying to cut the ERC and then also trying to still keep the reporting requirements for the 1099s. Okay. All right, guys. I love you guys. I will see you later on tonight's show. Totally different topic. But yeah, guys, I'm excited to be back, and hopefully this information was informative. And please like and subscribe our YouTube. Please like the video and subscribe to our YouTube channel, which is Folasade TV, guys. All right. Have a good day, y'all. Bye-bye.